Hi there. Understanding the CIS materials and labor split can help contractors and subcontractors calculate deductions correctly and stay compliant.
A construction firm hires a groundwork subcontractor for a £20,000 project. They submit a single lump sum invoice marked simply labor and materials. Faced with an unitemized bill, the contractor makes a quick, arbitrary guess at the split between the physical supplies and the human effort, applying the standard 20% CIS tax deduction to that assumed labor figure. 6 months later, HM Revenue and Customs audits the contractor's CIS 300 return. Finding no receipts to justify the materials cost, the inspector rejects the split entirely, holding the contractor liable for the underpaid tax, compounded by interest and compliance penalties. I am a tax advisor at Atlas Tax Advisors, and this breakdown is specifically for directors and finance teams running UK construction SMEs. The construction industry scheme exists to tax a subcontractor's labor at source. If a subcontractor inflates material costs to lower their tax hit, and the main contractor processes that invoice without verifying the actual expenses, the legal and financial liability transfers entirely to the contractor. Accurately deconstructing the split between labor and materials is the primary mechanism contractors have to protect their working capital from aggressive tax assessments. This equation illustrates Section 61(1) of the Finance Act 2004, the statutory rule governing how these payments are processed. Contractors must deduct tax at the appropriate rate, but only after excluding VAT and the cost of qualifying materials. HMRC applies a strictly limited definition to qualifying materials. It means the actual, direct financial cost incurred by the subcontractor to purchase physical goods for that specific job. No markup or profit margin is allowed. Consider a subcontractor who buys bricks for £6,000, but invoices you for £8,000 under the materials line item. That £2,000 difference is a retail markup. Under UK tax law, that markup is reclassified as profit, which places it squarely inside the taxable labor deduction base. HMRC actively hunts for these invoice discrepancies. Their algorithms cross-reference the materials exemptions claimed on your monthly CIS 300 returns against the subcontractor's own VAT and self-assessment filings to detect mathematical inconsistencies in the supply chain. Every time a contractor accepts a marked-up materials invoice without demanding the original supplier receipts, they mathematically underdeduct tax and create a quantifiable liability on their own balance sheet. In groundworks and demolition, the single most mishandled item on a CIS invoice is plant hire. The rules here dictate vastly different tax treatments based entirely on equipment ownership. This matrix knots out how HMRC classifies heavy equipment. Under the third-party rule, if a subcontractor genuinely hires a piece of machinery, like a telehandler, from an external third party without an operator, that cost legally qualifies as an exempt material. If the subcontractor actually owns that telehandler, the treatment reverses. They cannot claim a notional hire charge for their own asset. The equipment cost is treated as a standard business overhead, making it taxable labor. There is one strict exception: consumable fuel. The diesel required to operate either owned or hired plant machinery on site is exempt. However, the fuel used by the subcontractor to commute to the site remains fully taxable. When a subcontractor misclassifies their own fleet of excavators as a hired material expense, it artificially shrinks their total CIS base. Passing that invoice through your purchase ledger will trigger immediate red flags during a compliance review. Certain line items frequently appear on subcontractor invoices, but never qualify for the materials exemption. Things like travel time, overnight hotel accommodation, and commuting fuel, along with the use of the subcontractor's own hand tools, must always be included in the taxable labor calculation. This waterfall chart breaks down a £10,000 invoice: £6,000 for labor, £3,000 for direct materials, and £1,000 for travel and subsistence. By removing the £3,000 of actual material costs, we are left with a £7,000 CIS base. Applying the standard 20% rate to that exact £7,000 base generates a required tax deduction of £1,400. The most common administrative error is applying that 20% deduction only to the £6,000 labor line item, entirely ignoring the travel and subsistence costs. That mistake underpays HMRC by £200 on a single invoice. These miscalculations are about to carry far heavier consequences. From April 2026, Sections 62A and 62B of the Finance Act grant HMRC sweeping new powers to pursue tax liabilities up and down the construction supply chain. If a contractor processes inflated material claims or pays unverified subcontractors when they knew or reasonably should have known the split was inaccurate, HMRC has the authority to immediately revoke their gross payment status. Losing 0% gross payment status strips a firm of its working capital advantages. Verifying the mathematical accuracy of every invoice split is the mechanism that ensures the financial survival of the business. Getting the division between materials and labor right is a mandatory regulatory requirement with direct implications for your cash flow. To build a robust compliance shield, implement 2 immediate rules. First, institute a firm-wide ban on accepting lump sum labor and materials invoices. Second, mandate that subcontractors provide supplier receipts to prove the direct costs for any significant material claims. Third, actively scrutinize plant hire line items. Ask for documentation to confirm whether the equipment is genuinely hired from a third party, or if the subcontractor is attempting to write off their own capital assets. Running a rigorous internal audit on your purchase ledger today will isolate these errors, secure your gross payment status, and prevent heavy statutory penalties tomorrow. Please note, this breakdown is for educational purposes only and does not constitute formal tax or legal advice. If you're a business owner or director looking to stress test your CIS compliance controls ahead of the upcoming legislative changes, contact Atlas Tax Advisors today. If you found this breakdown useful, like the video, subscribe to the channel, and let us know in the comments how your firm handles complex invoice splits.